Okay, guys and gals, about 10 seconds of the obligatory disclaimer. If you want to read the whole thing, just pause the video. Okay, everybody, welcome. Let's take a look at several of the futures products. We're going to look at the S&P 500 index futures, and we'll also look at crude oil and gold. Now, as I do this video, this is Good Friday, which is the Friday before Easter. For us Christians, we also sometimes call that Resurrection Day, because the Lord Jesus, the Christ, was resurrected or rose from the dead. Now, that doesn't make him a zombie, but we celebrate this amazing weekend, which is perhaps even more important than Christmas. So let's take a look at this S&P 500. Let me get a little bit bigger dot. There we go. So here's what we're looking at, the S&P 500. This is the futures products. For those who don't know, there's also /MES, and this is on the TD Ameritrade platform. For those that don't know, most of you do, but if you don't know, this application is known as the a TOS platform. Okay. So this /MES, that's the E micro futures. Okay. These are futures contracts, not options, for those that want to know. Okay, we're talking about futures. If you don't know what futures and commodities are, you can DuckDuckGo it. That's right, I use DuckDuckGo. I don't like Google for a lot of reasons. Okay, so obviously way back here on, looking at the SP 500 here, back on March 15th, was the bottom of the quad witching, the quarterly cycles. And then it went on a rampage run for quite a while. Okay. But now, for the last week and a half to 2 weeks of trading, of course, it's been doing this. Now, some of this that I'm going to cover, a lot of you have already heard this, but this is really, really important, so I want you to pay attention, okay? Above all, the MACD has crossed over. That's pretty huge. And it crossed over above the zero line. That's that purple line right there. That's really important to understand where it's crossing over. It's crossing over on the positive side of zero. Okay. Now, it was pretty strong, right? The MACD up here was pretty strong. It was pretty high, like same thing we had over here. But this ramp up time was more aggressive than this one. Okay. So what do I think? Well, I think, we're going to have to wait and see how this bottom action is going, because it is bottoming. You'll notice it's hitting the 50-day moving average right here. But bottom type of action, which we're seeing these three candlesticks, doesn't mean that it's done going down. That could just be temporary. This is a pretty strong crossover, guys and gals. So it would not surprise me to maybe see a little bounce and then this thing go down again, especially coming into this time frame here. Okay, and we'll talk about that too, these cycles in a moment. Okay. What I really want to focus on as much as the MACD crossing over is, I talked about this, that I was seeing divergence warnings about a week and a half, 2 weeks ago on both the Big Daddy forecast and the stochastic momentum index. And sure enough, it's played out. Anytime I see both of these indicators getting these little dots like that, particularly if I see yellow dots here, that's a pretty huge signal. Plus, the same yellow dots or red dots on the SMI together at the same time, yeah, it's pretty huge. See how it happened back here? And you can see what the price action was, right? We had it happen back here, and eventually the price action came down. So anytime we see both those indicators with divergence warnings at the same time, it's pretty significant. You'll notice some divergence warnings here, but the Big Daddy didn't have them. Okay. Price still went down. Okay, it just doesn't. It just means it's not. It's not as strong, right? It's not as much as a sure thing. Is another way you could put it. Okay. Now, what I want you to also pay attention to is about a month or two ago, whatever it was, when I had a little free time in my hand, which I don't have a lot of that nowadays. I started working on this logic here for figuring out where the bottom of a cycle is going to occur. Okay. Well, this also kind of turned out to be a kind of a trend thing. It is finding bottom of cycles, which, if you want to know what a bottom of a cycle would be, well, this would be one right here. So we'd want to pick up these last few dots right here as the bottom of the cycle. My intention still is in the future to come back and keep working on this logic and basically get rid of the dots that come before it. All these dots here would kind of go away, and just these last 2 or 3 or 4 dots would be on the screen there, and you would know that you're at the bottom of a cycle. Okay, so just imagine that these drawings aren't even there at all for a second. Let's just imagine they're all not there. Right, I'm not coming right now. I come in here and I manually do this. Right, I put all these arcs in here. I'll put all these cycles in here. Well, if we can imagine for a second them not being there, and this logic, if it starts to work as good as I hope it will, it would actually draw the cycles for us. Okay. Or I might even, like I said before, I think last month or 2 months ago, whenever I did this, I might even write a piece of software that basically allows the users and members, premium members, okay, of my content, may get access to the application. It might be a web app. I'm not sure yet. Okay. Or they could come and say, okay, a little drop down, right? A little drop down. You click the little button and you get some options here that come down like this. And you say, okay, I want to look at cycle number 1. I want to see what that looks like. And behind the scenes, what would really be going on is there'd be this kind of logic going on there, and you'd pick number 1, and you'd see you'd see these arcs come up. They come up on the screen, okay? And you'd look at that and you'd say, it looks pretty good, but it's not. Maybe it's okay. And then you say, let me try number 2, and then you try number 2 option. So I might put a few cycles in there, just depending on what the logic returns. This drop-down box would be dynamic. You might only get 2. You might get as much as 3, 4, or 5 cycles to look at. Okay, makes sense, everybody? Okay, this kind of giving you a little bit of insight of how software developers think and what they do and how they design things. Okay. So that's something that I'm still kind of having in the back of my mind, okay? But I'm not necessarily trying to sell you anything here today on this video. I'm just throwing that out there because it's relevant to this conversation, right, in this video. And look at how awesome this logic was. I mean, my goodness, it picked it up, I think, on this second candlestick right there. Let me just get an exact match here. Yeah. It picked it up right on that candlestick right there. Look at that. That little dot, which happens to also pretty much line up, I think, with the first divergence dots. Actually, it's one after. Okay. See all these tools and all these analytical and mathematical algorithms that I work on. They start having kind of a synergistic effect, right? They start working in synergy with one another. And you can I kind of pick and choose where I see the benefits and toss out the ones that are not beneficial. If it's adding confusion, I get rid of it. If it's adding clarity, I might keep it and test it for a while. Okay, and I've been through many different iterations of different attempts at stuff, and this one right here is working out really well because it's working in synergy with these other ones. Okay. And even though it's one day later than these divergence dots, that's perfectly okay. To me, it's additional confirmation, okay? And look at this run. This thing told us that something's coming. Ba-bam. I mean, that first dot, and every time, guys, okay, maybe not every time. That's a little unfair to say every time, but most of the time. See, right here, this little mini run is a little late, right? It kind of didn't, because there's only 3 little dots. But when this one came in right here, oh my gosh, this was like like the gold rush. this was awesome. So I start getting the sense that I might wait 2 or 3 dots sometimes and make sure it's got a little run going. Okay. So that's pretty awesome. This really worked out amazingly well. Just absolutely amazing. Okay, so my take on this is that, obviously I wouldn't trade short now because this is, already kind of taken place, but I would have traded short maybe like right there or there or there. Any one of these three candlesticks, I would have traded short. Especially when I see the MACD starting to squeeze down like that. It starts getting tighter and tighter. I got divergence warnings going on. I've got this telling me that we're going to get a downtrend. I've got the SMI saying there's divergence warnings. Okay, it's all just coming together, right? I know that we're approaching the middle of this cycle. Okay, let's talk about this together, because before I give you the dates, I know everybody wants to know the dates, and that they are important. But I want to cover how I analytically look at this using the tools that I have and some of the algorithms that I have here, and how I would make a decision about trading short somewhere back over here, okay? So the first thing I'm going to do is I'm going to look at the MACD. Where's it at? Okay, so number one is the MACD, guys. So you're going to get a little lesson from Jerry today about how I would go about this. I'd look at the MACD. If I see the MACD beginning to pinch down and it's beginning to roll over, and this area, let's make this a little bigger. Let's make this a little bigger, yeah? Okay. If I see this beginning to roll over, and I see this area in here, guys, specifically right in there, this little geometrical shape, okay, that space in there, if I see it beginning to diminish, I know we're getting a crossover coming up, most likely. Okay, that's the way my mind works, guys. I think very geometrically, mathematically. I think like that. I see the world often in geometrical shapes. I don't think mathematics. I think geometry. And then I think about the mathematics that support that geometry. I don't know if you know this. Just a slight go off on a tangent here for a second. That's how mathematics was born, guys and gals, out of geometry, not the other way around. Yes, I know we got calculus and we got all these fancy mathematical curriculum in high school and university now. But if you go back throughout history, it all started with geometry, shapes. That's where mathematics was born out of, not the other way around. Okay? So if you do yourself a favor, if you want to strengthen your mathematics, think in shapes. 1, 2, and 3-dimensional shapes. Think that, and it's going to change your world and the way you perceive the world. It's going to strengthen your analytical skills, your discernment skills, everything, okay? Okay, so getting back to this, because everybody wants to make a lot of money, right? Which, that's a topic for another day. The issue of money and how it's treated and the way it's viewed in the world, even by Christians, can be dangerous. Okay, MACD, that's the number one. I'm looking at that. I want to see what is its behavior. Well, I would have noticed it's beginning to cross over somewhere right around there. Okay, somewhere in this area. I'm paying attention to the MACD, okay? Number two, I'm looking at the divergence warnings on the Big Daddy. Now, I know a lot of you don't have the Big Daddy forecast algorithm, but you do have these videos. So when I put them out once a week, you want to pay attention to those to see if you see dots. And I'm almost always going to mention them. So I'm looking at the Big Daddy. I'm looking at its peak strength, which was pretty peaky back here. Okay. I'm also paying very close attention to these divergence dots. That's those little dots are divergence dots. So I'm looking at, I'm just going to call it BD for Big Daddy. Okay. And I'm going to say DIV, short for divergence. Divergence dots. Okay. I'm paying attention to those, because those are giving me a heads up that something's coming. These guys right here. What do you know? I mean, they're almost right at the peak of this downtrend. Okay, number three. I'm doing the same thing on the SMI. SMI is going to be similar to the MACD, but it's going to be more responsive. It's going to react quicker. Of course, that has a lot to do with the way I have it set up. Okay, you can see the parameters over here if you want. Okay, 40, negative 40.35. That's the stochastic momentum index. Okay, so it's going to sometimes behave similar to the MACD, but it's going to behave more rapidly. Okay, so I'm going to look at the SMI, and I'm going to do the same thing I did with the Big Daddy as far as the divergence dots go. So this stays the same right here. Okay, divergence dots. Especially, guys, linking these two together, guys and gals. If I see both of those happen at the same time, like we did over here, here and here, they're linked. See that? Divergence dot, divergence dot. Okay, even back over here, there were some divergence dots, but those dots way back over here, in my videos I always talk about these. I don't pay too much attention to those because they just come out of a low. So those dots can be a little bit deceptive. Okay, but these dots here, they're linked and they're way past coming out of a low trend or a low in a trend. Okay, they're way past that. So that's the second 2 and 3. I look at those together. If I only get one of these two, usually it'll be the SMI will be by itself. It'll have divergence dots, but the Big Daddy won't. See how it happened over here? Then I'm like, it's important, and you can still make money. You just have to be a little bit more cautious and maybe take a more of a conservative setup on your trade, okay? All right. Number 4. I'm looking at my cycle dots that I've just put in recently. Okay, I'll just call it CYC for short, cycle dots. Okay. And in this case, they showed up immediately after the divergence dots. See that? The divergence dots were here. The cycle dots literally started the next day. Man, that is like gravy. That's gravy. These 4 together, gravy. Forget about it. It's crazy. That's money in the bank. Money in the bank. Okay, there's times it may not be accurate, but usually it's pretty doggone solid. Okay, so you guys can pause this video anytime you want and write these numbers down. Write down what I got here. Take a screenshot. Do whatever you got to do, okay? You got the video, you can play it back a gazillion times and hit pause. Go for it. All right, number 5. I start looking at the cycles. Okay. Let me see if this eraser, yeah, this eraser is playing nice. Good. Nice. This is a really good product, by the way, guys. If you don't know this product, this is, what are they calling this thing? I can't believe it just got rid of that. Okay, it didn't go away. I forget what that's called. Pencil. I can't remember the name right now. It's a really great product. Okay. What's it called? Epic Pen. Sorry. There you go. It's called Epic Pen. Okay, if you want to know that product, it's a really good product. Yes, if there's a free version, that's one I'm using. So number 5, I'm looking at the cycles. Okay, I'm looking at these cycles right here. Yes, you have to learn about cycle analysis to know how to draw these cycles. Okay, so I got two cycles going on at the same time, green cycle and yellow cycle. Remember, we're on the daily chart here. This is all daily, not weekly, not monthly, not hourly. But the same thing applies more or less to the other time frames. Okay, number 5, I'm looking at the cycles. Did we, where was cycle low? Excuse me, obviously there was one right here. Where's the next one? Well, there's one right here. Okay, so I'm paying attention to this cycle, because this is a very dominant cycle. You can see it's firing on all cylinders. Hits here, it hits here. It's going to hit here, guys. It's a good chance it's going to hit here. The price is going to come down here. Now, will it go way up like this and then come down and kind of be in this area? Will it come way? I don't know. This is not telling us where the price is going to be. It's just saying there will be a cycle low at this time, okay? So I'm looking at that. All right. I'm anticipating prices to decline into this time area, time zone, if you will, or this time frame. Okay. But just as important is the middle of a cycle, especially a dominant, well-formed cycle like these yellow ones are. I'm looking right at the middle of that cycle. In other words, at the very tippy top of that cycle, right in the middle, I'm looking at that. I really pay attention to the very top of the cycle. Okay, so on this side of the cycle, left side of that cycle, okay, as the price runs up, which happens more times than you would think, happens a lot on the left side of a cycle for the price to run up. Okay, when I begin to see that the candlesticks, as we're bopping along and making our way left to right here, as I see that we're approaching the middle of this cycle, if I start seeing divergence if I start seeing 1, 2, 3, and 4, I'm not going to go through all that again, right? If I start seeing 1, 2, 3, and 4 starting to show up as I approach the middle of a cycle, mid-cycle, okay, as I start approaching this middle point right here, if I see 1, 2, 3, and 4 already beginning to happen, oh my gosh, bells and whistles, baby. Bells and whistles. Okay? It's very common for price to come down or stall at the middle of a cycle. I talk about it all the time. Very common. Look, it happened over here. Price stalled, came down a little bit, right in the middle of the cycle. Okay? Look at this one over here. Middle cycle's about right there. Look at this, price stall. Okay? Extremely common. Because really, this cycle is just broken up into two smaller cycles, but it may not be, how do I explain it? It may not be obvious to your typical kind of the uninitiated, for the beginner student of psychoanalysis. It may not be obvious that the middle of the cycle is significant because it doesn't look like this kind of thing where there's a big drop. Okay, but it's still very important. And why? Because I would have shorted the pants off of this if I had any time in my life to do trading nowadays, but I don't. I would have shorted the you-know-what out of that. I got 1, 2, 3, and 4 ringing bells in my head, going off like crazy. I'm shorting the heck out of this. I would have made a lot of money in here, guys. I mean, thousands of dollars I would have made here trading this. Thousands. And that's conservative. If I was an aggressive trader, which normally I'm not too aggressive nowadays, I keep things kind of conservative. But if I had wanted to be aggressive, this could have been possibly tens of thousands. Excuse me while I get a drink of coffee here. Okay, so that's what I do. What are we talking about here? We're talking about trade setup. So what I want you to get out of this video is more than just me giving you the dates, which is coming up. I'll give you the daily and hourly cycle dates and all that good stuff. Okay, but I want you to get this out of this video because I want you to learn how to do it. You know, there's an old saying among Christians, right? Those that believe in Christ, those that believe in Jesus, because it's most appropriate because it comes out of one of the stories of what he did when he was walking on the face of the earth as man. If you don't know who Jesus is, well, he's God that came from heaven and came down on the earth in the form and shape of man. Imagine that, the Creator coming down to walk among his own kind. And when he did, one of the things he did was, of course, he took literal fishermen, right, the men that go out and fish for fish, and he turned them into fishers of men. And they went out and fished for the souls of men to add them to the kingdom of God. And so why is this relevant to what I'm showing you here today? Well, I could give you fish for a day, or I could teach you how to fish for yourself for life, right? That's the saying. And what I'm showing you here is how you can financially, trade for life. Not just coming to my videos and looking at them. And of course, I appreciate the members. And yeah, I make a little bit of money doing this. Not much, guys. My membership has continued to decline. No thanks to Google and YouTube and their shenanigans. But that, whatever, I don't really have control over what they do. So this is your opportunities. You're looking at this video. You're looking at 1, 2, 3, 4, and 5 here. okay, to learn how to do it yourself. Because guys and gals, I got news for you. This membership, it's possible it could go away. No, I'm not announcing that I'm stopping the content. I'm just telling you that things change in life. I'm just a man on the face of the earth. Okay? And people come and go. Right? I know where I'm headed. It sure the heck ain't backwards and down. Okay? It's forward and up. And those that you should be obvious by now that I believe in Christ and Jesus. You know what I mean. I'm going forward and I'm going up. And when I leave this place, the body doesn't come with me. And I'm in tune with the Spirit and the Word of God. And that's how my life is guided. And that may sound strange and foreign and even a little kooky to some people who don't believe in Christ. That's okay. I'm not going to hit you over the head with a Bible today in this video. I just want to give you a little insight on how I live my life and how it potentially impacts the members. Because if I get pulled in a direction that's strong, I'm going. And that could mean that the membership dwindles, and basically if it gets to the point where there's not a lot of members, I'm just going to say, okay, that's enough. I've done my best. So learn how to fish for yourselves, guys and gals. It's important, okay? I did. I watched Steve Miller, also known as Slim, for years. And I don't watch his content quite as much as I used to because I'm really busy and I know how to do psychoanalysis myself. But I still watch him occasionally. More for confirmation that my cycles are good. And he's an old salty dog. I mean, he's still the best. But that's how I learned. I learned watching him. If you don't know who Steve Miller is, you can look him up on YouTube. Just look up Steve Miller or Ask, A-S-K, Slim, and you'll see his YouTube content. And he has his own website, and you can go check him out if you want to, okay? But meantime, learn how to fish for yourselves. Okay, so those are the 4 or 5 things that I look at to set up a trade. For people who only could trade long because maybe you don't have futures accounts or you don't want to trade options, then fine. Just trade coming out of a low. Just trade coming out and trade the long side. When the dots stop, especially when they stop down into a cycle low like that, and they stop for a few candlesticks and things are going that way, trade it. Trade the money going up. That's all. Buy long and sell. Buy low, sell high. The traditional way of doing things. But I like to take advantage of both sides. Okay? And most traders really struggle with trading the short side because that's where they begin to lose money. Because they're buying, the market's going the other way, and they're losing money and they're frustrated. So learn to take advantage of the market on both sides. So those are the 5 things I would be looking at every time, okay, to make a trade. Now, of course, last quarter I missed the whole quad witching thing, which was my fault. The old quad back there on March 15th. I missed that. I was so busy right here. So my cycle was off. Okay. All right, let's go and do the times for the cycles. Okay, let me change the time frame. Put this out to let me put it out to 200. Okay, apply that. Okay, let me just back off on this just a touch so we can get to... Okay, this is a daily chart. Let's talk about this for a while. And then we'll switch over to hourly, okay? So, May 2nd. That's right there. May 2. That's that one. Okay. The next one. I think I've covered this in the last video last week, but that's fine. June 20th. Okay. 620. I know some of you have been doing really well on the hourly chart. Don't worry, we're going to get to that in a minute, in a little bit here. Okay, that's that one. August 8th. Again, I know I already covered this last week, but for those that didn't know it, now you do. August 8th. What does that mean? Well, that means wherever the price is, price could be way up here for all I know. Could be going like this. It'll probably come down into that. Or it might continue down from here. Or it might go flat and then go down. Doesn't really matter what the behavior is, just realize that's basically what these dates mean. The price will decline down into that time. From wherever it peaked, it'll decline down into there. You understand? It doesn't mean it's going to come down to 4,100. It doesn't mean that. Okay, don't get confused. This just means prices will likely decline into these times, into these dates. Okay. Let's look at this. September 26th. Okay, that should be more than enough for you swing traders to set up trades. Now, these cycles can change. So, the further we get into the future going this way, the less reliable these predictions become. Okay? This one here is the most reliable, right? A little bit less reliable, a lot less reliable, and, may not even be accurate at all. Then again, these all could just absolutely be spot on. We just don't know till we get there, okay? But this one's probably going to be pretty doggone accurate, May 2nd. Okay. Okay, my opinion, well, looks like we're in the middle of a cycle. Price has stalled in the middle of the cycle. We might get a little bump, but it's struggling right now to stay above the 50-day moving average. It's just bouncing right along on it. So a lot of you already know what I'm going to say. I'd wait to see what it's going to do. I wouldn't trade this. Not unless you're doing some type of options play that you're just trying to take advantage of a few days trading sideways. But I wouldn't trade it right now. I would not trade the S&P 500. I'd wait to see, is it going to bounce? Or is it going to get below this 50 and start coming down? Once you can see which side of the 50 it's going to be on, give it a few days, and you get a really good sense what this is going to do, then I trade. Okay? But right now, this looks like, well, let me just check. Okay, we're still just trucking along here, guys. I mean, to me, where are we at here? We're at, okay, we're in the, 14th of April, this is 5.2. Yeah, I'd be a little cautious. Just remember, overall, this is coming down into 5.2. Okay, it doesn't mean it's all going to happen from now till then. It's all going to be down. Okay, but just be aware of that this time here is somewhere near there. Prices are going to come down. For right now, the MACD looks like it wants to roll over. It may get a little stoppy, and then come down. It may kind of bump and go down. It may just go down. Okay, those are all things you're going to be looking for. Are we going to get a bounce above the 50 before we do the come down thing? All right, let's look at the hourly. Let me get rid of the dots because they're kind of screwing up the screen here. Looking at the wrong thing there. I need the studies, edit the studies. We're going to take off the cycle low. We're just going to come in here and say that. What is cycle low? That's my own algorithm. Yeah, it's a pretty amazing, right? For those that don't know, on TD Ameritrade platform, the TOS platform, Think or Swim is what it stands for. Think or Swim platform, okay, you can create your own algorithms, okay? Let's see, is it in there? There it is right there. You notice how it doesn't have a question mark next to it, and it doesn't have like a little lock or copyright symbol next to it, okay? That's because I created it. It's called Cycle Low. Okay, and you can do that. You just come over here and you say create. So for those of you, I know some of you who are in different areas of the world, you can't get the TOS platform. Okay, sorry about that. But for those that are, guys, I probably shouldn't tell you this, but VPN might be your friend. Then you could download this app. You didn't hear that from me. Okay, so you could come here and you click create. All right, and then you can create your algorithms like you see me doing here. Let's take a look at it. You're all like, oh man, how does that work? I got to see that logic. Sorry, I can't give it all away, guys. Okay, so let's get rid of that. All right. Here we are, hourly. Let me switch over to the hourly drawing set, and let's take a look. How accurate is this hourly stuff? The hourly cycles. Let's take a look. Let's take a look. I like that for English. Let's take a look. For my friends over there in Holland, I'm going to call it Holland. I know. Is it Netherlands? Netherlands. I think it's Netherlands, right? Forgive me for not knowing my world geography for the second. For my friends in the Netherlands, Y'all need to teach me how to speak. Is it Dutch? It's Dutch, right? I think it's Dutch. Yeah, y'all gotta teach me to speak some Dutch. Okay, give me some the server, the Discord server. Well, my Dutch friends, Dutch members, give me some pointers, man. Help me out. Okay, I'll start speaking some Dutch in some of the videos. Okay. Yeah, let's look here. That's pretty good. Within a few days. I mean, within a few hours. I'm good with that. That's pretty good. It's within a few hours. This one, yeah, this was a tough one. This one was off. I mean, it's not horrible, but it's definitely off by a little bit more than I would like. Okay. I will say that this does appear to be hitting a bottom right smack dab in the middle of the hourly cycle. Okay. So that's a good thing. I get a feeling here that this hourly cycle is trying to change. Okay, it looks like it's trying to do something. It's a little bit more dynamic. Let's remove this. I'm going to probably do this every week until I really get a strong feel for what this hourly cycles are doing. Let me squish this up and see if I can pick out some major stuff. When was this? March 29th. Okay. Let's take a look here. So the first thing I'm going to do is, for those that want to know about cycle analysis and how to draw them, and I know a lot of you have already seen this, but we're going to go through this, okay? For those that haven't been paying attention, we're looking for pointy little bottoms. How's that for being simple? Pointy little bottoms. Well, no, that's not some kind of weird perverted thing. Okay, pointy little bottoms. There. That one might even apply. Definitely that one. This one, maybe even that one. This one, that one, that one, that one. See that? That's it, guys. That's cycle analysis. That's the heart of it anyway. There's a lot more to it than that, but that's the heart of it. You're looking for those spiky bottoms. Now, and sometimes in markets you won't get them. They won't be obvious. Okay, but for the last few years, it's been obvious. Really obvious. Cycle analysis the last few years has been so awesome. Okay, but I remember a time when the stock market was just basically flatline dead, and you really couldn't draw cycles. Okay, so I'm looking at all these. Now, I want you to, if you need to pause the video here, just pause it. But what I want you to notice is these 4 X's I put on the screen. If you just kind of back away from the screen, you'll see just with your natural eye that they're approximately the same distance apart. Now, this one's a little bit tighter, okay? But you can get a sense that this distance, this area, okay, you can even just put a rectangle in there. See, I talk about geometry, man. I talk about it all the time. You guys got to make use of basic geometry. Just put a rectangle in there. Okay, are they about the same? Yeah, they're about the same. This one's a little bit smaller. Okay, so this area, or in other words, this distance, we're going to keep it simple, distance, is approximately the same between all those X's. Okay? And then we see the same things over here. Look at this. What do you know? It's approximately the same. This distance. Okay? So that's how you do it. Just keep it really simple like that. So why do I say I feel like that the hourly cycle might be changing? Well, look how I got a bunch of X's all popping up here. They weren't like that before. They were evenly spread out, more or less. Now I got this stuff going on. And that's why this makes it, this feels like there's a change in behavior, right? It feels like there's something going on here. You know, I kind of noticed it over here. I was starting to get a sense that something was up. Okay, and we're gonna wait till see. You know, gotta kind of continue to wait to see what is going on here. Let me get rid of see if I can get rid of these guys. Okay. So the challenge now is, of course, let me clear everything out here, is identifying these, is trying to determine, is there a new cyclical pattern? Okay, that's what we're really trying to figure out here. So experience matters, okay? It helps. Because if you just have raw intellect, if you just have raw, like, e- um, equational analytical analysis only, if that's all you have, then you'll kind of miss out on the feeling side of things, the artistic side of things. It's true in life as well, right? So I'm a software developer. I bet some of you would be surprised to hear that I'm also a singer. I sing. Okay, I also I've done a little bit of acting. Okay, I play golf. Not as much as I used to, but whatever. I have a lot of other interests. Okay, so that's what I'm talking about. There's a computational, rational, analytical aspect to who we are, and there's an artistic side to who we are. Now, in psychoanalysis, both of those attributes exist at the same time. Okay, there's analytical, very kind of strict analytical equational type of analysis going on here, but there's also, you have to factor in experience, or kind of like touch or feel. You draw on that experience. So why am I talking about that? Because I'm about to do that right now. I'm going to draw on some experience, and what I'm discerning possibly, I'm going to wait to see how this thing matures. But what I'm, based on my experience, I think this is a bottom. It's kind of collectively a big X. Okay? And if I had to pick out of this, I'd pick this one right here. This one. Okay? But I'm not sure yet, and I'll wait. I'm going to get what we call, this is another huge one, we're going to get what's called confirmation. I know it's a long video, guys. You can skip forward, backwards, whatever you want. Okay, but this is the hourly chart. Let's do it together. Here we go. We're going to try to pull some cycles here. Let's see what happens. Yeah, I like it. I like it. Let's see. Give me a moment here. I need to just look at something. Pretty good, pretty good. Pretty doggone good. Okay. Okay. I'm still not convinced. I need a few more moments here to eyeball this. Shave and a haircut. Bum bum. I like it. I do declare I like it. Now, it may be what we already had, and that's okay, but it's worth going in and doing it again every week to be certain. Okay. So why do I like it? Well, we're definitely hitting right there. This is not. But it's not a huge deal, because that's a very strong upward momentum going on there. So not a huge deal. This one's pretty much spot on. This one's on. This one's on. This one is on. And guess what? Bam. That one's on. So when I first drew the cycle, I started way over here on this one. I grabbed the cycle drawing, which is that guy. Okay, and I pulled from right here on this low, and I started going to the right, and I pulled it. You all saw me doing that, right? You can go back and pause and watch it again. Okay, it didn't hit on this one. I said, okay, no problem. Let me see if it hits on the next one. I just kept pulling it out until I lined up with this one. And then while I was holding it there with the mouse, I just looked to the right. Did it hit in this area? Yeah, it hit in this area. Did it hit right here? Yeah, it hit in that area. Great. I've got 1, 2, 3, 4, 5. And out of the 5, I got 1, 3, 4, and 5 that are hitting. That's good. I talk about it all the time. 4 out of 5, that's 80%. That's a good hit ratio. Okay, 4 out of the 5 X's. Right? Okay, getting into a little math here. 4 out of the 5 X's equals what? Well, this is just me making up some nonsensical kind of equation. 80%. Okay, we got 80%. We hit on 80% of the X's, or 80% of the cycle lows. Okay, great, sweet. Now, What does it all really mean? Well, what it means is, and I'm going to give you the exact hours moving forward, okay? But what it means is now we're going to wait to see what happens here. Do we hit? Well, we got an 80% chance historically of hitting here. That's really high. That's nice. Okay? Now, we know the future doesn't necessarily repeat exactly like what we got in the past. Okay? But often it does. Okay? All right. Now, let's clear all this out. I'm going to keep the cycle because I like the cycles. The cycles look pretty strong here. Okay? Let's go here. I'll give you the sauce. For those that want to know the sauce, I'm going to give you the sauce, okay? That's not enough. What is going on here? That time frame doesn't seem right to me. What's going on? Still doesn't look like it's enough. This thing's acting weird. Acting really weird, guys. I don't know what this time frame thing is doing. It's really getting weird. Let's try 500. Okay, that's better. Okie dokes. Okay, here we go, guys. April 17th, 10 p.m. Okay, so this is we're gonna do this. You can all just pause, take a break, whatever. This is all Texas time. No, I'm not gonna do you the special clocky clock for your time zone. You figure it out. There you go. 4/7, 10 p.m. That's that one. April 21, 6 a.m. Okay. April 21, 6 a.m. Central Standard Time here in Texas. You get out your own time zones. Figure it out. April 26th, 1 p.m. Okay. May 1st, 8:15 p.m. Normally I would write that as 2015 military time. Okay. Next one. May 5th, we'll call it 4:15 a.m. Okay. Okay. May 10th, 11 a.m. Let me look at that one more time. Yeah. May 10th. Well, that's a weird looking 5. I think I said 11, right? Yeah, close enough. 11 a.m. Okay, there you go. That's it. Pause, screenshot it, screen snap it. I don't know, save it on your smartphone, your Androids, your whatever device. You know, I'm not going to tell you exactly when I was born, but because that information in today's world has to stay private. But that's to say I've been around a while. And I don't even like mobile devices and smart devices. And I think they're garbage. I know. Where would you be without them? I tell you where you'd be. You'd be in a much more peaceful life. There, I said it. All right, there's your hourly stuff for the S&P 500. Enjoy it, guys. Remember, prices tend to decline into those times. Also, remember, this is strictly my opinion. I don't give financial advice. So as you're moving this way into the future, these cycles probably tend to become less reliable. All right, let's move on to crude oil. And I'm going to kind of just bang out the crude oil just on the daily and then gold on the daily. That's all I'm going to do. I'm not going to do any other time frames, okay? Let's get this back to something reasonable like 100. All right, and we're going to do crude oil. We take a look at these cycles. Do I like them? No, I don't like them. I don't like these. Well, let me just make sure. What do I have? Daily. Okay, there we go. That makes a difference. Now I like them. See, being on the right drawing set down there, that's important. Okay, now I like them. Now they make sense. Oh yeah, pretty good, pretty good, pretty good, pretty good, pretty good. Okay, cool. So, what's this next cycle? May 4. Remember on the daily chart here, crude oil, May 4. Okay, next one, May 30th. These cycles haven't changed since the last time I did the video, so if you go back to last week's video, you're going to get the same stuff. Okay, July 19th. Hold on a second. Hold on a second. June 23rd. Sorry, my bad. June 23rd. Okay? And that's good enough for now. So there you go. What do I think? My opinion only about this? Well, it got below the 50-day. It popped up above it. And, I mean, overall, it's still strong because it's above the 50. But let's see. Since the first time at the beginning of the year, right at the beginning of January, this is the first time we've been below the 50. 4 months later, crude oil gets below the 50. So overall, I'd say it's a slight sign of weakness. It certainly isn't as strong as it was. It's also the first time we've come down on the MACD and touched the zero line. I'm seeing some stuff here. If the... See this, guys? See how you got highest, a little lower, a little bit lower. We're talking about geometry here. A little lower, little lower. What's this going to do? Okay, everybody see that? See how it's going down slightly? Just slightly, like a slow running river, slightly going downhill. See that? Yeah. But how can that be, Jerry? Prices were going up to the moon. What are you talking about down? Yeah, well, you know, something y'all need to put some thought into. Okay. So we pay attention to things like that because when the MACD finally comes good and says, hello, I've crossed over, that matters. And you can apply, crude oil is kind of its own creature, so it's not quite the same thing you'd see with the S&P 500, okay, because the way futures contracts expire every month and blah, blah, blah. So it's a different beast altogether, but some things still are applicable and the same, and this crossover definitely matters. Okay, so I'd be looking to see on this SMI if it only gets up to like right here and starts going down again. Dun 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 dun. Nah, nah. That's that way. For right now, I'd say there might be a little more into this, but just because of what I'm seeing here, okay, there might be a little more into it. But I think overall, guys and gals, I think 5.4. I think, yes, price will come down. How much down, I don't know. I think price is going to come down. I think crude oil is not going to get back up here. That's my sense. That's my instinctive feel about this chart. Okay? That the prices of crude oil are going to come down. All right. That's it for crude oil. Let's go look at gold. And finish up this very long video. Very long. Gold. We're looking at gold. I meant to say gold. We're looking at gold. Daily chart. Daily. The old daily. Oh my goodness. Look at this chart. This thing's a beast. Yikesies. Man, gold. Gold, man, cyclically gold is not as easy to look at the cycles on the daily for gold. It just, not it's not as obvious. The cycles are still there, but they're kind of So give me a moment to look at these cycles. I think I go through this every week or so. I look at these cycles on gold and kind of just look at it and go, All right, so let's pick them out. This is clear. That one's pretty clear. That one's pretty obvious. This one's obvious. That's obvious. Could be that one, this one, or this one. Okay, not that one. That's in the middle of this, so we can exclude that. See how I did that? I looked at this low point, but I excluded because it's moving up. It did kind of show up on the radar there. So technically, that's still a cycle low, potentially in the middle. So that's another thing you got to remember. Just because we have a cycle low doesn't mean prices are going to decline. They could just go flat. You know, Steve Miller calls that swamped. I don't worry about it. If it's an uptrend and the cycle doesn't show any low, so what? Who cares? You want to call it swamp? Call it swamp. That's fine. Whatever you want, whatever term you want to throw on it. I don't let it bother me. I just realize we're in a very strong upward momentum, and I don't care that there isn't a significant observable cycle low, because other factors are helping me to trade. In this case, long. I don't worry about it. Now, it might give me pause knowing there was a few days in here to maybe just chill out a little bit and not trade, or, be a little more conservative, or, pay close attention because prices could begin to fail, right? And they did a few days later. All right, so I'm okay with this, but this guy right here, he or this, because that's kind of like a cluster, okay? It's like a cluster of, a little bit of a clustering of candles. I call those clusters, okay? And they tend to kind of come together, and sometimes collectively they form a low, rather than just being a pointy point. But there's a point there, okay? And that's the thing that's kind of got me going, because it's not really, this one is more in alignment with what I would expect. But I can't ignore that candlestick. So you know what's coming next, right? We're going to draw some new stuff. We're going to draw some new stuff here. Okay, we got the right drawing tool. Now this time I'm going to try to find a convincing low here. So we've got 3, 1, 2, and 3. That little one right there. So those are my 3 candidates. So okay, so for those who want to know how I would do this, there's a couple ways you can draw cycles. In other words, let me take a step back. Specifically, where do I start? What's my starting point? Well, you can really start anywhere, but it's a good idea to start one of two places. Either in the past, somewhere that's super significant, one of those 4, okay? Or you can start, fairly close to where we are currently. Okay, you don't necessarily want to start right in the present at the exact day, okay, but you want to start somewhere near there. That's going to increase risk, though. It's going to increase the risk of being less accurate, but sometimes it's worth to do that. When to do it, that's kind of hard to explain. But so there's one or two ways you want to start. One is you can start in the past, okay, on predictable low points. I'll just put pred. In program we call those never mind. Predictable lows or observable lows, okay? Observable. You can observe those lows, okay? Observable lows. Just like I did here. Just put your little X's on there. Boom, boom, boom. That's usually the best way to go, okay? But sometimes I like to start in the present, close to the present. This is kind of my way. I'll do this first sometimes. I'll do number 2 first, and I'll start from the present, work my way back. Okay? And I'll get those cycles because it helps to try to find the best predictable low moving forward. That might be a little bit about as clear as mud to some of you, but I'm going to do it anyway, okay? So I started right there on this candlestick, the low wick, okay? And now I'm going to pull back. I'm going to pull back to this first X on the screen. And does it make sense? Does it line up anywhere else? Well, look where it does. It does line up on some of those X's, okay? It doesn't line up on that one. It doesn't line up on that one, but it's going to line up with this one, okay? Pay attention to this X way over here. You see how it lines up with it? I don't know if you can see that because of the light little blue arcs. Okay. So I'm just temporarily, I probably wouldn't keep this cycle, but just temporarily I'm going to put this up here so I can explain to you everybody what I'm talking about here, okay? So let me make this yellow. Get it nice and thick. Okay, so I used number 2. We started with number 2. We started in the present. I found the low point relatively close to the present day. The present day is right there. I worked back. I could have picked that one, or that one, and I picked this one right here. Okay, I got my drawing tool up, my arcs, okay, and I started pulling back. I pulled back to the nearest X, this one. Well, it didn't line up with that one. See how this over here doesn't line up with this? It didn't line up with that one, though it's kind of close, but it didn't line up with it. But it did line up with this one. So 1, 2, 3, 4, 5 out of 5, really only 1, 2. Or you call it 3. 1, 2, and 3 lows out of the 5. 3 out of 5. It's okay. It's okay. 60% if my math is right. 5 goes into 36 times. 60%. Everybody know that trick? 5 goes into what? 30. 60%. Right? Okay. So 60% is not that great. It's okay, but we could do better. But that really wasn't the whole goal of doing number 2 first. Okay. It was just to kind of put in my memory bank where these cycles hit. Okay, now what we're going to do is, okay, we are going to clear up some mess here. All right. And give me a moment here. We're going to now pull from another dot. This dot over here instead. Yeah, I know it's a little bit trying. It can be a little bit methodical. It can take a long time. I got things to do, Jerry. Why are you taking up all my time? Well, you know, if you want to be a good trader, this is what you do. So now I pulled from that one. I'm going to pull from this one instead. Let's see what that does. And I know I don't have the X's on the screen, but I can pick them out with my eye here. Okay. Okay, so I'm going with this low right here. So I've pulled from this one, and I'm pulling all the way to here. It's total garbage. I mean, it doesn't even hit anywhere else. It kind of hits right here on this one. Okay, but that's about all it does. Not very helpful. Definitely not very cyclical. I'm going to try to pull to that little candlestick right there, and let's see what we get. Doesn't work. Doesn't work. Okay, we know that one didn't work right there. What if I pull a big one over here? No. So now what I'm going to do is just for giggles and kicks, I'm going to intentionally move this arc to where we get an arc that hits on this low over here. Okay, so just imagine I started right here. I'm going to pull and I'm going to watch any arc that lands on that low. So far, nothing's really. That one kind of did. Where was that? Yeah, right there. Kind of a small. I'm really cautious about too small of an arc. I don't like really small cycles because they can be very deceptive and they can really make you. They'll force you into bad trades. So I don't like tight small arcs or small cycles. Normally I stay away from those. I'll include them in addition to big cycles just for like additional confirmation. Okay, so that's not too bad. That one's kind of hitting on that low and it's hitting on our starting point. Then from there I'm going to look at the rest of the cycles. They don't hit at all. Let's go to the next one and make it a little bigger. Okay, I see 1, 2, 1, 2, and 3 only hitting out of all these. Not very good. Okay, we're going to go one more. 1, 2. Okay, 1, 2, 3, 4. This is kind of good. 1, 2, 3, 4. Yeah. Okay. This cycle, believe it or not. See, cycle analysis can really play with your mind. That's why it's important to go through the iterations. It's important to go through all the potential, what I call candidate cycles, because you'll be surprised sometimes. So what am I talking about? We started right here. Good. That little dinky guy, he may not look like much, but he's definitely a candidate because I notice overall I see a little downtrend right there. Okay. Does the next one hit? You doggone right it does. It's within a few hours. I like that. Does this one hit? Oh, beautiful. Within like another game within a few hours. Does this one hit? Perfect. It's about 3, 4, 5 hours off, but it's pretty good. And then this one hit. So guess what? 1, 2, 3, 4, 5 cycles in a row. Bingo, baby. We've got a candidate cycle that's looking like it's the winner chicken dinner. Okay? Absolutely nailed it. Now, the last thing, if you really want to be 100% thorough, is you'd come back and you'd pull from this cycle right here. Okay, so I'm going to do that. I'm not going to clear these current cycles out because 100% is 100%. I don't want to lose it. Okay, so let's pull from that cycle right there. All right, I'm just going to keep everything on the screen the way it is. And I'm going to pull another cycle right over the top of these. I'm going to start right there. Boom. Let's pull to some X's. What do we get? Shmeh. It only hits 2 of them. Not so good. Let's pull to this one. I see a low point right here, so I'm kind of pulling to that. What happens if I go there? What if I come this way? No. And then we'll just come way out here. Yeah, see? Not crappy cycle. Crap. Krapinski. Good. There you go. Now that we've been well over an hour, you all should have gotten a huge lesson in how to pull cycles and cycle analysis. And this crude oil, I'm sorry, not crude oil, but gold. Doing this for gold, you should really have a great understanding. You first go through and find the obvious spiky lows and put X's on there. That's what I do. Okay. Then for your most recent area, you want to pick out candidates the same. I just put dots under them. Boom, boom, boom. Then you're going to pull from those dots. And that's exactly what we did. We pulled from this one. It was okay, but it was 3 out of 5. We pulled from this one. Bingo, 5 out of 5. We pulled from this one. It was garbage. Maybe 1 or 2 out of 5 at best. This is our winner right here. There's your cycles, guys. For daily cycles for gold. All right, let's check out the future, wrap up this video with gold, and call it a day. $6.2. 6.2, that's that guy. August 1. Bump, bump. That guy. September 28th. Okay. That guy. That's a horrible arrow, but we're going to go with it. November 27th. Okay, that's more than enough. Remember, the further we go into the future, the greater the probability that these cycles will start to not be accurate, okay? We're pretty far from June 2nd, so even this cycle is going to have to be carefully looked at. Gold, man, it is not like the S&P 500, and it's not like crude. It is less predictable when it comes to cycle analysis. Okay, oh my gosh, that was a long video. 1 hour and 10 minutes long. I'm done. God bless all of you. Happy Resurrection Day. Happy Easter, everybody. Enjoy time with your family. Love one another. Forgive one another. Go out and do great things and have great motives. Set it in your heart and your mind to be the absolute best. Talk to you all real soon again next time.